India spoke to Amit Syngle, MD and CEO of Asian Paints, over the quarter gone by and the way forward. Listen in to what they had to say.
So actually what we see is that when we look at the overall performance, the performance has been obviously quite good, both from a top line and a bottom line perspective in terms of what we have been able to deliver. Typically, the month of June is also a stocking month, which happens as a precursor to the quarter two, which is largely a stocking period from a festival point of view to that extent. And therefore, I think what we looked at is pricing decisions were taken in line with that. And therefore, we feel that normally, we would have stocked people a little bit more in the month of June. And therefore, all the pricing actions basically came in at the right point of time to kind of really stock the network. So I think from a overall point of view, I see that there would be a little bit more stocking in terms of the pipeline stock in terms of from a quarter one perspective, but that doesn't alter the overall top line growth in terms of what we have really been able to achieve.
Okay, right, but it typically versus what you were penciling in, it was stronger, is what you're saying.
Yeah, so I think the price increase normally will have an impact. And if we see that the June price increase was also not very heavy in terms of the percentage in terms of what we took. So I would say that the impact of the price increase in June was not too heavy in terms of initiating that larger stocking, which would have done. But yes, marginally, it would have been up from possibly normally in terms of what we would have looked at.
So Amit, give us some texture on pricing. You've spoken a couple of times that you've taken those price hikes. Is it sufficient to kind of cover the raw material price increases that have already played out? Where are we in terms of covering for that?
So overall, if you look at during the 3 months, we have taken almost a price increase of around 13 to 14%, which has been spread across the various months. Overall inflation has been to the extent of about 24 odd percent in terms of what we have seen. So obviously, I think as we see it, the price increase doesn't cover the full inflation. But what we are also seeing that in the month of June, that we have seen some softening of prices in certain key raw materials in terms of what's really happening. So I think the volatility in the material prices is something which is indicating that we need to be very, very measured and balanced in terms of taking all the increases, because we don't want to increase prices and suddenly decrease the prices then again to that extent. And therefore, we have taken a balanced stand in terms of how do we balance demand, how do we balance pricing overall from the point of view of the volatility which we are seeing in the raw material prices as we kind of go ahead. So therefore, I think today we are also seeing some trends of price softening. So I would say that, in a larger run, possibly as we look at it, some impact of inflation will come, but we should be able to balance out stuff as we go into the quarter two.
Yeah, very interesting. So how much of those price increases are now done? You said 14% is what you've done last couple of quarters, and 24% has been the raw material price increase. Also, you said that there's been some softening in raw material prices. How much higher how many price hikes do you intend to take? Maybe Q2?
So as I said, given the current volatility, I feel that we are really waiting and watching in terms of what is really the whole area of macro environment kind of really pans out. And given the volatility which we are still seeing in the raw material prices, we would kind of tend to wait before we take any decisions in terms of either increases or decreases which have to happen depending on how the prices pan out to that extent. As of now, possibly we are pausing and really looking at the trends to see what do we need to do.
Okay, so wait and watch with regard to pricing. What's the impact, Amit, of pricing on volumes? Because volumes have been resilient, at least on the decorative side of things. Talk to us about overall volumes, the trends you're seeing. I know you don't disclose a number, but if you can, give us a number and give us a sense of what's playing out.
So overall, volumes have been robust. We've got a 9% kind of top line in terms of what we have kind of registered. Even when we look at from a point of view of overall industrial, I think the volumes have been still decent in terms of what we have been able to do. When we look at our global operations, the volumes have been in close to about double digits in terms of what we have achieved. So therefore, I would say that across businesses, the volume growth has been fairly robust, which is there, which is pretty independent of the price increases to some extent. Marginally, the impact of price increase would come in there. And therefore, I would say that it kind of really depicts that the overall demand which has been there in quarter one has been fairly okay in terms of what we see, especially from the rural geographies. The demand has been quite good.
And will Q2 therefore be slightly softer from a volume perspective, given the stocking up that's happened in Q1 and the fears of price hikes?
So as we see it, volume quarter two is definitely a month where people tend to stock even more in terms of as it kind of goes ahead. But a lot would kind of depend in terms of how possibly, the rains pan out and what is the kind of scenario which is there in the month of September. But what we are confident is that as we roll out in quarter two, we are still kind of really aiming that we should be in that band of about 8 to 10% as far as the volumes are concerned.
And Amit, how much of a tailwind has supply chain volatility impact on smaller players been for you? You've suggested that on the con call. Give us a sense as to how much of that has impacted your numbers, and how likely is that to sustain?
So I think definitely in the month of April and May, we saw definitely some of the smaller companies getting stretched from the point of view of their supply chains. Material was definitely not coming at a regular interval, and inflation was very, very high. And therefore, what we saw is that in terms of some of the smaller companies were not able to kind of really supply to the market in terms of what they should have ideally done. But what we have seen is that I think all the organized players largely have been able to kind of meet the demand in the market, and therefore along with us all other companies have really met the demand. So therefore we would have gained slightly from the impact of the smaller companies not doing well, but that something would be again marginal and not too very high in terms of the performance that we see.
Okay, marginal. 18 to 20% is what you've guided for on the margin front. Gross margins have improved by 90 bips. Let's talk about that number first. How sustainable is that accrual?
So as you see that overall we have for the year still maintained a guidance of 18 to 20%. Normally what we see is that quarter two is a little bit lower in terms of the margins, in terms of historically what we have seen given the product mix, what we get in the market. So to that extent, I think quarter two would be a little bit lower in terms of what we see, but we think largely we should be able to maintain our band of 18 to 20% as we kind of go ahead. And even for the year, I think we are sticking to that guidance.
Okay, but you're clearly seeing this as a sustainable trend, right? Even from an EBITDA perspective. So, 20.6% odd. Q2, you might see some cool off, but it'll be driven by volumes. Thereafter, you'll see a bit of a recovery again in margins. Is that the right way to kind of think of margins for the rest of the year?
Yeah, yes, I think that is the right way to kind of look at it, because we will kind of really see that there would be a little bit up and down in terms of various quarters. It will happen. Obviously, I think the inflationary environment will have to be watched very, very critically in terms of how raw materials prices are kind of panning out. But I think we are confident that we should be able to maintain the guidance in terms of what we have given for the year.